Welcome to QLM Business News. Here are today's news stories. Challenges holding Bitcoin below $28,500. Bitcoin began the week with a glimmer of hope, yet it remains constrained by three significant factors preventing it from reclaiming the coveted $30,000 milestone. On October 2nd, Bitcoin briefly surged to $28,600, marking a 5.5% intraday rise. However, it quickly lost steam, partly due to the underwhelming launch of Ether ETH futures exchange-traded funds, ETFs, which failed to ignite substantial trading volumes. While the recent uptick provided some optimism, concerns have resurfaced, primarily stemming from remarks by United States Federal Reserve representatives. Their comments have reignited apprehensions about an impending economic downturn. Bitcoin displayed short-term resilience by holding support at $27,200 on October 3rd and subsequently surging above $27,500 on October 5th. Nevertheless, three pivotal trading metrics signal a lack of robust support. These metrics encompass spot market volumes, derivatives, and confidence in securing approval for a spot Bitcoin ETF. Macroeconomic headwinds impact Bitcoin price. On October 2nd, U.S. Federal Reserve Vice Chair for Supervision Michael Barr voiced his expectation of an economic slowdown, below its potential due to higher interest rates curbing economic activity. He emphasized that the full consequences of the current monetary policy are yet to materialize. The market currently stands divided on the possibility of another Fed interest rate hike in 2023, according to the CME FedWatch tool. Furthermore, on October 3rd, the real yield on U.S. 10-year Treasuries, factoring in inflation, reached a staggering 2.47%. This rate represents its highest point in nearly 15 years, a development partially contributing to the U.S. dollar index, DXY, achieving a 10-month pinnacle. Additionally, Reuters reported that the United States has gained appeal as an investment destination due to its resilient economy, offering stronger growth prospects compared to Europe and China. Declining trading metrics and institutional participation. Bitcoin's monthly futures typically trade at a modest premium over spot markets, indicating that sellers demand higher prices to defer settlements. In ordinary circumstances, BTC futures contracts should sustain a 5% to 10% annualized premium, known as contango, a condition not unique to crypto markets. However, Bitcoin's futures premium continues to hover below the 5% neutral threshold, remaining in the neutral to bearish range. This signifies a dearth of demand for leveraged long positions. Moreover, spot trading activity on traditional exchanges has dwindled to levels not witnessed since late 2020, highlighting reduced involvement by institutional investors. It's important to note that the decline in trading volumes may be attributed to prominent US-based trading firms, including Jane Street Group and Jump Trading, distancing themselves from the cryptocurrency markets in anticipation of scrutiny from regulators. Bloomberg attributes this shift primarily to heightened regulatory scrutiny, which has rendered the crypto market less appealing to institutional investors. Diminished hopes for a spot BTC ETF. One of the key drivers of Bitcoin's 68% gains in 2023 was the anticipation of approval for a spot Bitcoin ETF by the U.S. Securities and Exchange Commission, SEC. However, despite multiple postponements by the regulator, the recent launch of Ether futures-based ETFs on October 2nd experienced lackluster demand. Furthermore, despite a favorable court ruling permitting the conversion of the Grayscale Bitcoin Trust into a spot Bitcoin ETF, it continues to trade at a 19% discount relative to its Bitcoin holdings. This data suggests dwindling confidence in the approval of a spot Bitcoin ETF, as investors retain the option to redeem their shares at par value following the conversion. In summary, Bitcoin faces substantial hurdles in surpassing the $28,500 resistance level, exacerbated by Federal Reserve warnings of impending economic challenges. Consequently, the prospects of breaching this resistance in the short term appear less favorable. Disclaimer: this analysis is based on current market conditions and should not be considered as financial advice. Cryptocurrency investments are subject to high market risk, and viewers should conduct their research before making investment decisions. This news story is brought to you by QLM Business News, your digital media channel. Visit qlmbusinessnews.com. For more business news stories, also follow us on Facebook, X, and YouTube. To help QLM Business News bring you more news stories like this, please like, share and subscribe.